While India's young and skilled workforce is now smarter about making their money grow, job losses and economic uncertainty due to the COVID-19 pandemic has forced many of them to reconfigure their investment and saving plans. And as discretionary spend on travel, eating out and shopping comes down, Gen Y is keen to put the extra bucks to work. To help this aspirational set of people grow their wealth and meet life and financial goals, India has seen the emergence of a crop of personal finance and wealth management startups that are using technology to engage customers. Well, COVID-19 has certainly given each one of them an even bigger play. Now, with a low entry barrier, these technology-fueled ventures are hand-holding first-time investors by using algorithms and AI to assess risk and make smart investment decisions. According to the NAC, historically, India has always invested in physical assets. In fact, Indian households invest about 60% of their savings in physical assets like gold and real estate. Insurance accounts for 18% of India's financial investment, as against a mere 6% for shares and debentures. As an extension of this reality, India's retail investors constitute only approximately 13% of stock ownership in India, and demat accounts are less than 10% of the number of banking accounts. This statistics brings us to the question that we're asking today. As this digitally savvy breed of investor shows the willingness to drop traditional assets in favor of equities and mutual funds, are new age tech-based wealth management platforms prepared to unlock the huge opportunity as the investor, market and economy mature? Hello and welcome to Young Turks, India's longest running show on startups and entrepreneurship. I'm Shireen Bhan. Joining me now to take this discussion forward are Gaurav Rastogi, the CEO of Kuvera, Lalit Kishare, the co-founder and CEO of Grow, Atul Singhal, the founder and CEO of Scriptbox, and Satyan Kothari, the founder and CEO of Cube Wealth. Gentlemen, many thanks for joining us here. Let me go in order of seniority of the companies that you have founded. So Atul, I think that brings me to you because you founded Scriptbox in 2012. But even though you're the oldest on this panel by way of incorporation of your company, we have at least a decade on you because CNBC TV18 has been trying to be the personal finance ready reckoner for almost 20 years now. So Atul, let me start by asking you, you founded Scriptbox in 2012. COVID has provided a big push for companies like yours. Take me through the experience that you've had in the last few months to start with.
Well, thank you very much, Shireen. Yeah, I was slightly surprised to be called for a program called Young Turks, given my age. But we've had a fantastic time. I think this actually has proved increasingly why digitization is the right thing to do for customers, for the entire ecosystem. Customers found it convenient to transact. Customers found it easy to sort of invest more. So in terms of numbers, if you look at the industry in the last 2-3 months, they've been net negative, right? Especially the retail market or the equity markets. In mutual funds, we've had net outflows, whereas Scriptbox has had its best 3 months in a row. So it's been a blessing in disguise. We sort of forgot to get the COVID is bad for business memo. And more customers are sort of trying us out, doing more. Existing customers are doing more, which is actually fantastic. So this has reiterated our promise that digitization and online is the right route for customers and for businesses.
Okay, digitization is the way forward, and July to August have been your best months that you've seen as far as Scriptbox's business is concerned. So let me go from the old kid on the block to the newest kid on the block, Satyan Kothari of Cube Wealth. You founded Cube in 2018, Satyan. So let me ask you to explain to me what your experience has been in the last few months and what do you attribute this big shift that we are seeing, these numbers that Atul was talking about, and you've experienced pretty much the same. What do you attribute this shift to? Is it just a more digitally savvy, aware customer? The fact that, there is all of this financial uncertainty, so they want to make smarter choices. They're not spending on travel, etc. So they want to use the money left to use it wisely. What do you attribute the shift to?
Shireen, great to be on the show again. You covered us in 2013 in the early days of Citrus, so it feels like deja vu in a good way. I think there are 2 big reasons we've seen in the lockdown. Number one is exactly the statistics you recited, that Indians traditionally have not invested. They have saved, but not invested. And there are many reasons. One of them, I think, is just inertia. I'll get to it next weekend because it's work. to read a blog, to see shows, to decide what to buy. And I think COVID's given them the luxury of time to say, I need to get serious about my life, my finances. I have no more excuses left of commutes and office times. So that's, I think, helping a lot in the growth we've seen. Number two, I would say even for people who are investing, the importance of quality has come up in the last 6 months with the extreme volatility in the market. So I think people are saying, who can I trust? Even if I'm setting up a SIP, and if my money is going down or it's giving me palpitations saying one day in March the market drops and then another day we have all-time highs in the US markets, who can I trust? And that's where they trust advisors, and which obviously is one of the key tenets in Cube, which is how do you get quality advice?
Yes, trusted advisors are the need of the hour, and I have to say that at CNBC we're proud to have been an investment ally for the last 20 years. But Gaurav Rastogi at Covera, let me ask you, you founded the company in 2016. Gaurav, take me through what your experience is. What are you seeing in terms of ticket sizes, and what's the demographic that seems to now be coming on to platforms like yours?
First of all, everything that Atul and Satya mentioned are definitely a good step. I think in terms of digitization, in terms of how the online investment
Gaurav, we're going to
industry...
reconnect with you. We'll reconnect with you. Your audio is really faint. Let me get you on a better line. But let me ask Lalit the very same question. Lalit is the co-founder and CEO of Grow. Lalit, take me through your story.
Yeah, so as you rightly said, right, if you look at the demographic, the trend that was last year, that will also be one better thing about internet platforms is that you can even if you are in smaller cities, you can download the app.
No, we seem to be losing that line as well. Technology not really helping at this point in time. So let me go back to Atul while we reconnect with Gaurav. Atul, let's talk about the demographics. Let's talk about the ticket sizes. What are the sort of new trends that you're seeing?
And so when we started Tripbox, the old people like us, 2013, started the early saver. We wanted people to get started. We wanted people to start investing in mutual funds, start investing in the equity markets, and obviously have a fixed income portfolio along with that. As time has progressed and as we've matured, our customers have matured with us. And over the last, say, year or so, we've seen an increase in both the size of commitment, the ticket size, and our profile of customers. So not only have our own customers matured, and they're looking for better solutions and larger solutions, we're also attracting a higher profile of customers. So our own mix has gone from, say, a first-time savers used to be about 50%, and now that's down to about 25%. So even people who were traditionally offline and being served by offline advisors, and like Satyan said, they're looking for quality, they're looking for more transparency, they're looking for consistency, and they're finding that on our platform. And I would say that across all four platforms. We really don't see each other as competition. We really see the offline market, which has got to be digitized, as where the customers should migrate to. So we're seeing a larger ticket size, we're seeing an older customer, we're seeing deeper commitment, we're seeing people doing more with us. So people looking at insurance, people looking at direct equity. So rather than just doing mutual funds when they started, they're looking at us as wealth managers, and that's a fantastic trend for us. And I think that will happen increasingly over the next 3 to 5 years. As savings become investing, as investments digitize, as people give more commitments, and a single platform for a holistic view of their entire wealth, we feel we're in a great place to continue to grow. So, yeah, COVID has only accelerated the journey, but the trend is a little while back. So we actually have customers who have, we would call them private customers, typically. They trust the process, they trust the algorithm, and they trust the transparency, which I think is quite to really look at managing, especially because our portfolios are all based on math, and only algorithms that allows us to do more.
Right. Okay. Satyan, let me ask you, what is the kind of average monthly investment that you're seeing? Has there been a significant increase in that? I believe that you're seeing downloads to the tune of about 1.5 million or so. Take me through what the data is telling you.
Sure. So, Shireen, it's very important across the 4 platforms on what each one of us caters to. Let me just quickly give an overview of who we are not right for. Everybody loves to say we are right for everybody. We're not great for somebody who's just starting out investing. There are better apps that are simpler to pick a mutual fund quickly. We're not great for somebody who says, I want to dig into the data, I want to see complex graphs, ratios. We don't cater to that. We believe in simplicity. We're not even great for HNIs who love the hand-holding service of an account manager showing up with a 20-page PDF printout to justify whatever the market does. Who are we right for? We are right for a busy professional, somebody in tech, somebody in product, media, doctors who say, I don't have time, I respect my money, and I want to drive this. And I want somebody else who I can trust, effectively our advisors, not even Cube, who can handle that. Cube's job is to keep it very simple, straightforward for them to find the right products, adjust, etc. So in fintech, we are tech and they are fin, right, our advisors. To your point, how are they seeing it? It's actually very interesting. When you cater to this TG, most of them give us a trial period of 3 months where they invest a very small amount. They could invest 50,000 rupees with us, and then they see how it's working. And in 3 months, then we see it skyrocket per customer. So per customer value has gone up actually after the March crash in the markets because our portfolios were beating it by about 15-20%. So now we are reporting about 8 lakhs per customer as a portfolio as they trust us more.
Okay. Okay, all right. We will take a quick break so that we can reconnect with Gaurav and Lalit as well and continue this very interesting conversation. Stay on with us. You're watching Young Turks. We're talking about the rise of digital personal finance advisors. That and more when we get back. Welcome back. You're watching Young Turks, India's longest-running show on startups and entrepreneurship. Let's continue our conversation with Gaurav Rastogi of Covera, Lalit Keshure of Grow, Atul Singhal of Scriptbox, and Satyan Kothari of Cube Wealth. We're talking about the personal finance ecosystem in India. Gaurav, you founded Covera in 2016. It's an AI-powered personal finance management app. To Satyan's point about what they're not or who they don't service, what has worked for you at Covera? What's the kind of market that you're going to be chasing after? What have you seen change for you in the last few years?
Sure, Shireen. So I think our reason for starting Covera, and this goes
mute,
back
Gaurav.
Actually, I'm not. Hi, can you hear me? Hello?
Yeah, go ahead.
Sorry, yeah. Going back to 2016 when we started Covera, see, our purpose for starting Covera was slightly different, right? So we are a personal finance platform, but our thought process was that what's plagued the whole personal finance ecosystem historically is a lack of trust and transparency. So we were the first one to bring in a low-cost investment model into India, to bring the prices down, to get investors better advice, and that has historically worked for us, and we don't see that changing. I think even today, if you look around the investment framework, if you look around the investment landscape, there's still a lot of mis-selling that happens. There's still a lot of small print, what they call in financial services, that no one reads, and I think there is a big scope for digital platforms like ours and others to bring in that transparency, to bring in that trust. And that's what we build on. So the product is important, whether be it mutual funds, direct stocks. We now have US stocks on the platform as well. But it's the what you bring to the table at the end of the day is that trust and transparency for which people will start believing in you, will start transferring the same trust to you that they did, that our parents did for banks. Every family used to have their favorite bank.
Yes.
And I think we have this opportunity today to be that bank for the future.
Okay, to be the bank for the future. Lalit, let me ask you about what kind of headroom you see for growth. And, given the numbers and where we are and the under-penetration, it looks like there is a significant amount of opportunity available. In fact, I believe you've launched your new product, Grow Stocks, and you've reported 3 lakh new demat accounts within the first 3 months of launch. So take me through what the plans are now going forward.
Yeah, Shireen. So our plans are like, so we are slightly different. We believe in DIY approach. So we have all the products very openly and in a very transparent manner to all the customers. They can come and decide themselves. There are tools available for them. Decide, okay, what mutual funds they want to invest, what stocks they want to invest, and then they can take their own decisions. So we believe that the millennial segment, right, a lot of young folks who are coming, right, if they get what Gaurav also mentioned, and what all of us are trying to do, if they get transparent information and simplicity on their products, new folks will come into the industry, and I believe there's long for this entire wealth management to grow very large in India.
Okay, so let's talk about what that opportunity could be. Gaurav, I believe you're targeting an AUM of about 25,000 crore rupees in FY21. Is there money to be made, though? By when do you expect to break even?
Very interesting question. So I think currently we plan to be break even in 3 to 4 years. That's how we see things evolve. There's money to be made. I think fundamentally as a fintech platform, we have to bring costs down. So it has to be a balance between long-term profitability, because there's no point bringing the cost down if you don't survive. So it has to be a balance between you bring the cost down for the end user, so it's a win-win for them. You make money in the process, but you make money by what you say, you collect pennies from a million people instead of collecting $1 million from a single person. So the difference here is that the scale is what kind of makes you profitable, and not because you're charging a 2% advisory fee or a 1% advisory fee per user.
Sure. So it's going to have to be a lot of pennies that you collect, Lalit. So let me get you to comment on that. You've got, about 8 million registered users across 850 cities. What's the target that you're looking for in terms of being able to go on that penny collection drive?
Yeah, so Shireen, the way we look at it is, we are getting into the internet domain. So instead of going to that $1 million investor, you're going to like millions of users who are like investing, let's say, smaller amounts, and then you are collecting that. This is how the typical internet businesses work. You're catering to like millions of users, and then you're making small amounts from everybody. And because you have like millions of users, you can become a very, very large company. Our targets, if you look at the long term, there are at least like 250 million people in India who are doing deposits, who have a lot of money lying in their savings bank account, right? That is not giving them any returns. Like they don't even beat inflation. So by providing them an easy and transparent access, right? Like in like next 10 to 15 years, we hope to cover like today that number is just 20%. That is investing in the funds of stocks.
Yeah.
You can look at the room.
Okay. So, right, a significant headroom. Atul, let me ask you, you've got plans not just for India, but outside of India as well, and Scriptbox is forayed into markets like Singapore and UAE. Is that going to be something that you're going to aggressively pursue?
Absolutely right. While we do believe that there is a DIY component, we also believe India is a more DIY. The do to me, people like to be handheld. So while we do provide the experience digitally, we do provide a human touch if required. So our belief is that there is a lot of money to be made by serving customers better, right? And we see that, as I said, our vision is to serve 1 million families and make them reach financial freedom or financial happiness. Yes, we have expanded abroad, and this is more for the inbound money. Right? There's a large NRI population in especially the Middle East, and in Singapore, who ultimately will come back home. And they're currently investing in, like you said, real estate, gold, illiquid assets, don't really have transparency, don't have access to their own portfolios. So we believe that a digital wealth provider like us can be a great conduit for them to invest in liquid assets, which are high growth, which are well managed. So whatever we could do for the Indian consumer, we plan to do exactly that for the NRI.
Yeah.
So there are slightly different needs for them in terms of the language, the promise, their own experience on the platform. So we're customizing those solutions for these markets. And I believe it's a really large opportunity. And we started well. So we have about 10% of our currently.
It's a large, yeah. It's a large opportunity, and it's an opportunity that Satyan, you at Cube are also considering. You're also looking at international markets like UAE and targeting NRI investors. You know, again, what is the strategy going to be there? And more importantly, in terms of fundraise and profitability, what's the plan?
Shireen, we take a very different approach. So I'm going to disagree quite violently with Lalit and Gaurav. In our approach, we think this whole
and I like disagreements.
The whole focus on providing the lowest cost service to the mass markets is in wealth management. I think it's a bit misplaced. It's important, but it's a second priority. It's not like e-commerce where the cheaper the product is, the happier the customer is, right? That's a zero-sum game because you're giving up margins. This is something that you're working on somebody's lifetime of financial freedom and their future. I think Indians especially focus a lot on fees as opposed to the return in wealth management. If I was to tell you, instead of charging you 0%, I'll charge you 0.5%, but my returns will be 5% more, you'd really be very bad at maths to turn down that opportunity, right? So our take is high quality advice comes at a price. These people who are really smart and in the market don't want to work for you for free. Why should they? If you want to do it on your own, go ahead. But my take is people do more research before buying a phone than they do before buying a stock or a mutual fund, which is absolutely the wrong way to approach your money. So we are very proud of the fact that we charge for some of these products. Our advisors charge for some of their products, or they make commissions. They have to earn a living if they're going to be around to give you great advice 10 years from now. And we are not apologetic about it. That also helps us that from our first transaction, we made money. And things going well. We have a very small user base compared to all three of my lovely peers here. But things going well, we should be profitable sometime next year. Whether we find the market internationally or locally.
Okay.
Our job is to make customers love us so much, and because we are producing wealth for them, not just because we have a nice UI, that they refer their friends and family. And they said, this is the right product for you to be better.
Well, profitable next year, that's the plan. Gentlemen, I'm going to give each one of you a final say. Gaurav, so Satyan doesn't quite agree with the approach that you're taking, but let me get you to respond to that. And also, give me the biggest pain point that you're currently facing, and how do you intend to address that?
See, I mean, disagreement is part of the market, so we always think it's healthy. Having said that, you know, we have a whole database of advisors in India. They don't beat the index. And it's true globally, it's true in India. The marketing material can say whatever it wants to say. Data speaks, and that's what we stick by. That's what we always say. So at the end of the day, again, disagreements are good. Not necessarily means everyone has to think along the same lines. People still go to the casinos knowing that they're going to lose, so there are all kinds of customers. What's our biggest pain point?
Yes.
For us, it's our, you know, we need to hire more, and we just can't find good, talented engineers. So that's
I'm guessing that you're not the only one facing that problem. We have a situation where people want jobs but don't have the right skills for the kinds of jobs that are currently available in the market. Lalit, let me close by asking you, what's the plan? Also, looking at raising any more funds?
No, we are not currently looking to raise funds. our plants are much currently. What we are seeing still the demand of our users want more products, and we are getting them those products on the platform. So plans are to just keep getting them products at the platform.
So to keep growing, no pun intended, Gaurav Rastogi, Lalit Keshre, Atul Singhal and Satyan Kothari, thanks very much for joining us here on CNBC TV 18. We wish you all the very best of luck and we hope to check back in with you as you continue to grow your businesses. We'll take a break here. Don't go anywhere. We're back in a moment with more.